If you look at this kind of a cheat entry is lower handle just below the 50-day. The volume profile is not that bad. You can see increased volume. We're again drying up the volume in that handle, coming good volume back up. However, there was a 13% risk, so there was no way for me to enter the name if we opened somewhere towards the low of the range. But what happened next day was the name opened inside and started coming through that handle. So what I did, I entered basically as it was crossing the previous day highs. Free rolling, it basically means de-risking. Right? You can move your stops, you can stagger your stops, and you can take some profits off. You can shave off some profits. Basically, if you get stopped out, you break even. If you look at it, it's a perfect volatility, contraction characteristics. You have this gap up here. You start going into this base here. It's kind of a time, if you look at it, it's a little bit time compressed here. It's maybe just 4 weeks kind of wedged up action, not really a nice base. What I really like here is the shakeout and at this area, which is met with some buying here. So we had some weak hands that we got rid of, but bought it here from this picture perfect handle on the top of this the main supply resistance area. As again, the supply completely drenched here, followed by a powerful breakout, increased volume. I would guess it was maybe 40% above average. Maybe also the important thing is track your numbers, and not everybody's doing it. And I think it's the key aspect of the trading. You have to know your game, where you stand. I think there's no shortcut for work. And if you do your screening, we will eventually discover these patterns, being it either a technical theme, meaning if you look at your watch list and what names are working, are those proper cup with handles, are those pullbacks, are those high tide flags, what's working, and of course also groups and sectors. But I would maybe advise the traders, or what kind of I discovered, I guess maybe during the USIC also, it's kind of a trying to self-discover myself and focus on the best version of myself as a trader. We all aspire to be like our heroes, like Mark Minervini and David Ryan and so on. But at the end, it comes down to defining your own style of trading.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below, and if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. All right, welcome back everybody to the TraderLion podcast. I'm your host, Richard Boglin. This is brought to you by the Ultimate Trading Guide and Deep View. You can check out those resources down below. Joining us today for the second time is someone who I really enjoy chatting about the markets with, Leos Mikulka. He's a top performer in the US Investing Championship. He finished last year with a 409% return. And today we're going to dive through a lot of his trades from the past year, what made the difference, his strategy, his key setups, and talk about some key principles for achieving triple-digit returns. So Leos, thank you so much for your time again. This is going to be a lot of fun, and we're going to show a lot of specifics too, which I think is really important, but it's great to have you back. Welcome.
Yeah, thanks for having me, Richard. It's an honor to be back after all those amazing traders you've had in the past year. So I'm grateful to be back.
Yeah, perfect. Well, I think I'll learn a ton from today's session. I think everybody watching will as well. So let's go ahead and dive right in. And I know there's probably some traders who maybe didn't watch our previous interview where you went in depth into your background, but maybe if you don't mind giving a high level overview, just to give a touch on that. And then if they want to learn more, they can of course watch the previous interview, which will be a link down below.
Absolutely. So me personally, I've been trading now about 8 years, going into a 9th year. Traditionally, I'm coming from the classical, I would say, O'Neill style canceling methodology, which I kind of refined over the years, also influenced a lot by Mark Minervini, Leif Soreide, and so on. And I would describe myself, I think, when I talked to Christian Flanders recently, I think he had a good term, that we're kind of boom and bust traders. We had lots of ups and downs in the years. So went through also several drawdowns, kind of build up the stake back, and was just keeping on improving this. Uh, I've never really deviated from my style, so I was stuck to this canceling kind of methodology, which was kind of my base, which I refined over the years. And yeah, last year I decided to join the USIC, and I think it's gonna be a main topic of today. So.
Yeah, perfect. Well, obviously, you finished extremely well. Before we started recording, you said to me you'd be happy. You would have been happy with a top 20 finish. Obviously, you did quite a bit better than that. But, I think it'll be really cool to see the trades and opportunities that led into that. So, yeah, so let's go ahead, if you don't mind sharing your screen, and we can dive right into those. And then talk through everything. And I like the chart markups you did where you kind of take a step by step through the trade, because you were 100% right. We don't want to be just, hindsight analyzing. We want to kind of be talking through what you saw in the moment, what made you decide to execute, how you manage risk, all of that. So, yeah, feel free to share whenever you'd like to.
Exactly. It's gonna be. Yeah, I have a lot of charts prepared from winners, losers to also. There might be some question. A lot of people recently reached out and they asked about, the trading ground positions or like aggressively managing the shorter time frames. So we'll see where we get when we touch on that. And as you said correctly, we don't do hindsight trading, so try to prepare it a little bit more closer
Yep.
to real time. So just give me a second and I'll share it.
All right, Leo. So we're going to start with, it looks like ARM from the IPO phase. So yeah, let's go ahead and dive right in. Talk
Yeah.
through why you were watching this name, and what you were watching as it formed this base.
Yeah. So ARM was one of the biggest winners I had that year, and I actually started already trading it. As you can see, it was in a 23. So basically, what we're looking at here is this perfect IPO base, where what I was looking like, the found some bottom, found some foot, and get a S4650, and just jumped right into this overhead supply. And so I started watching it as the name's coming into this resistance and starts kind of like draining the supply, as you can see. And these contractions around the resistance getting kind of lower to allow the name to go into this acceptable risk that I would have for a position, which would be somewhere anywhere between, let's say, 3 to 7% ideally. If the risk would be a little bit larger, I would be thinking about maybe stacking the stops. But ideally, we wanna aim for as little risk as possible, which kind of presented me at this time. If you can look at that volume action also, we're having an increased volume going to that resistance, and that volume really
Dropped off.
drenches here. And there's this last day before the breakout. The whole handle is about 4 to 5 risk. We have some overhead here, but it's not much of a concern. It's one-day IPO. We have a lot of cushion. Next day, going into a breakout, perfect breakout, opened inside, which is even better what we were looking for, which allowed me to very quickly de-risk the position to move the stop to about 1.5%. So now we're looking at a huge R multiples. Naturally, I would be looking for a handle here in that area somewhere. Then question is where it is actually. So as long as we're getting this increased volume coming in, we're more or less free rolling 1.5%. Right. So what happened after? As you can see, the progress through the trade. So what I would start doing, uh, the handle I was talking about, suddenly we're seeing it. Surprise, seeing a handle in a base near highs. Reasonable handle too. I think you could be entering here again on the pullback, maybe even a bit aggressive from
Through the
this
high.
spot,
Yeah.
from this 10-day moving average pullback. Uh, what allowed me to do is basically just keep moving the stops, the risk in the trade. So here we're talking plus 1R further bounces, the risk in 2R. First profits I took was somewhere here in this strange day here. And then really open inside, drop directly down, taking the first profits, maybe talking about 3R, progressing through it. It looks very climatic here, already breaking this horizontal line, taking another profits there. And then what happened here was very, I would say, expert buy or a bit unusual buy for me. But what was happening at that point, I saw a lot of names on my watch list. They're doing the same thing. They're dropping, finding the support along the technical areas, being it moving averages or maybe some low of the base and so on. So what I tried to do as the name dropped down and was coming back through these lows, I started a position with about 1% risk. There's a high probability, maybe 75% of the time I can get knocked out. But if we get on 1% risk, if we get 4% profit, I can do it 4 or 5 times over and I would still be profitable on name. And somehow it paid off. So it's continuing to hold it further. Maybe some little mistake that I didn't take any profits here, but still, well, again, almost free rolling the trade. Reduced a little bit of the position on very not very nice action. And what's happening here, we were coming into earnings, right? On all of those positions, I have about 3R plus a little bit more what I added. So comfortable cushion to hold into earnings. And those earnings, as we can see,
Yeah.
Yeah, it was just what was it, like 50% gap on the earnings. So I was immediately starting like reducing, and into this climax, close the position. So a very quick velocity IPO play, one of the largest winners. I left a little bit of the name to go through the basing, but this very volatile action just knocked me out. But what I would start doing is moving the stops along the key points. So as you can see, 10-day moving average breakdown, closed it down there. 20-day moving average breakdown, close the whole position.
Yeah, perfect. Can you step back to the IPO base slide where you marked up kind of your initial entries? I've got a few questions there, but this markup is awesome. Yeah, one or two more maybe, if you don't mind, Leos. Yeah. Yeah, cool. So your initial buy here, obviously you've got those two tight days right below that key resistance level. That's what you're looking for. How much of your portfolio are you looking to position in a name like ARM, and does it being a recent IPO change things, or do you kind of treat it the same as a typical position?
It would depend on my recent portfolio traction, right? So the position size is not necessarily driven by whether it's an IPO or whether it's a long-term name. The position size is driven by what is the entry, how much risk can I put into the entry. Here we see about 5%, which is a traditional stop. So I'll be even aiming, if I have a traction for my full positions, it would be ideally 25% of my whole account. Naturally, if my watch list is not acting perfect, or if the whole market conditions are not favorable and I haven't had recent tractions, then I'll be scaling down the positions to, maybe if I'm starting from cash, I would start maybe 4 positions, which would be maybe 6% of my account.
Right.
Based only on the recent traction, I would be adding more.
Yeah, perfect. Do you remember how much of your account this one was, or?
Yeah, I think it was 25%. Yeah.
25%. Perfect. And then you talked about free rolling the trade a few times here. Can you maybe explain that concept? And it seems like it was heavily influenced by Mark Minervini. He's a big advocate of that process, but maybe discuss how you think about that and then also what you actually do in order to accomplish that.
Yeah, so free rolling it basically means de-risking. A lot of people, when they hear de-risk, they might be thinking only stops, but you might be de-risking the name multiple ways. If the name breaks out, like we saw here, you have a leverage. What you will do with the name? You can move your stops, you can stagger your stops, and you can take some profits off. You can shave off some profits, right? If you shave off some profits and move your stop a little bit higher, basically, if you get stopped out, you break even.
Right.
You're free rolling the trade now. So, of course, it depends on the magnitude of the action. Sometimes you can do both. Right? You can take a little bit off, move your stop. Sometimes you can be just trailing along these technical areas, what I like to prefer to do in some powerful names to allow it a little more space.
Yeah, no, that's super helpful. And this one acted perfectly from that initial breakout, and like you said, formed that handle just below highs. And I like how you pointed out the potential additional entry area through that inside day. Would you have considered, obviously this is a hindsight trading question, but would you have considered, adding through that, or you already had enough in the trade that you were just letting it work?
I think if I remember correctly, I didn't have so much traction. I had already some other positions at the time, so I was not interested in adding so much and getting very heavy in one single name. So again, kind of yes and no answer,
Yeah.
but again, yeah, depending on the traction. Uh,
That's trading. There's going to be a lot of yes and no question, no answer. So no problem at all. I think this is a really good example about selling into strength, and I think that's a question that a lot of traders watching this are still kind of thinking for themselves how they do that. And we can see kind of where you reduced here on that one day, which broke the low after a nice breakout, and then also when it got climactic. Could you kind of talk about, from a high level? Um, what situations would you look to reduce a position that's trending well, and just to take some profits and also lock in maybe parts of the trade, parts of the position. So kind of when do you decide to sell into strength?
so selling into strength, I have few basic rules. Uh, First thing is, of course, first thing you want to do, you want to reach at least two multiples of your risk of your initial stop, if ideally. Of course, it's again not black and white answer. If I would be entering maybe from more aggressive entry, which we can show further, and the name would be maybe running into some overhead supply. I'll be looking also in those technical areas, and potentially if I would be even like 1 hour, 1.5 hour, I would be maybe peeling a little bit off again to kind of minimize the downside, kind of the improve that worst case scenario, right?
Hmm.
So if maybe my initial risk would be 5%, by reducing it to 1.5 hour and moving stop maybe to 3%, I would increase this worst case scenario to a little better. Um, Similarly, if the names, as you correctly said, is breaking some climatic grounds, I would be looking to again to peel off a little bit there because there's again with each day like that there's an increased probability that you're gonna get some pullback. You might be waiting for a new entry,
Right.
so it also comes with a uh, factor time factor, right?
Yeah. Perfect. And this one, that last sell climactic action, were you completely out of the name at that point, or did you still have some position
I
on?
still had
Yeah.
I tried to hold it for the basing period afterwards,
Hmm.
uh, but again it's yeah that base that was shaping afterwards it just shook me out of those key
Oh, actually,
areas.
actually, I meant the first climactic action. So on that previous slide,
Oh no,
um,
here
yeah,
here
were
I
you all?
was
Yeah.
no here I just reduced the position
Hmm.
and I had these stops there along this 20-day moving average.
Gotcha. Yeah, perfect. And let's see, what did I want to ask? Yeah, so this one, you ended up holding through earnings, and it acted tremendously well after earnings. What's kind of your rule for, what profit cushion you need to have in order to hold a portion through that kind of binary event.
So for earnings, you can always look at a option market and what is implied move of the name. Currently, you also have certain services that you don't even have to calculate it necessarily by yourself, but you can very easily find it available online. So kind of it's a good habit to look at this implied volatility through the earnings. And if you judge that you might have a sufficient cushion, let's say implied move is 8%, you have a 6, 10, 15%, I would be willing to hold at least a portion. Again, it's not 100% or zero. You can always just reduce some and maybe leave a little small portion to through the earnings.
Yeah, excellent. All right, can you step through towards the end of the trade? I just want to see if there's anything else I wanted to ask there. If you go just basically to the last slide there. Yeah, perfect. Yeah, nice. Yeah, what a move. This is a great IPO base to study and all of that. Um, let's see here. No, I think this is pretty clear. And one actual question I wanted to ask was on a climactic type action or just a sell to strength, how much typically of your original position are you selling into strength? Or is it, 25%, 10% each time? Does it depend on the situation? How do you kind of decide how much to reduce?
It also depends where we're coming from. If if it's a climatic run like this that we've already had a decent run up, I would be at that point. It's most likely have already peeled some off, and I would be basically reducing portions, typically like 25, 33% piece by piece until
Hmm.
I'm very bad in getting rid of everything, as you can see here. So very often I will leave maybe 2, 3% position, just kind of not to lose the touch with the name, which very often then stops me out eventually.
Yep. Well, this was a great trade, and like I said, a really good IPO base for people to look back and study from this past year. So perfect. Thanks for sharing that. And yeah, let's run through the next one.
Mhm. So next, what we can look at is I'm not gonna jump into I have a GEV ready, which is also IPO and just a little bit different character, so we can look at it maybe further. But what I'll jump to is SMR, example of bit aggressive trading that I did
Perfect.
at some point during the year. So if you look at SMR, you can see it's a extremely wild base. And you have a almost 50% decline, which is very often no go. Very often a no go. I would not be willing so often to trade name like that. But what kind of made me to try to enter his name was actually GEV. It was this nuclear theme coming up with many other names holding up, like those VST, GEV, couple other names. And while I was holding GEV, which was rocking all-time highs, I saw SMR setting up as well. Uh, what was unfortunate though, if you look at this kind of a cheat entry is lower handle below the just below the 50-day. The volume profile is not that bad. You
Hmm.
can see uh, increased volume. We're again drying up the volume in that handle, coming good volume back up. However, there was a 13% risk, so there was no way for me to enter a name if we open somewhere towards the low of the range. But what
Hmm.
happened next day was the name opened inside and started coming through that handle. So what I did, I entered basically as it was crossing the previous day highs right here and putting a very tight stop of about 5%. I had to reduce the size here. So maybe if 25% is my original size, I would reduce it to maybe half, like 12.5%, because there's a high probability I'm gonna get knocked out. Right? Just maybe intraday move can easily knock me out. What happened? Next day, as you can see, there's absolutely no check back. The named followed through right after that. And at this point, again, when we talked about de-risking,
Hmm.
what it allows me to do is, again, start moving my stops a little bit. So as you can see here, what I started doing here, I started basically trailing. I moved it first here a little bit, and then very soon after I started trailing this 10-day moving average, which already it's, yeah, because we're looking at a big move, it might not look like much, but I was here already at like 1.5 hour, 2 hour, and so on. Reduced first profits here. For, as we talked before again, for the potential handle area, you have the same pattern here. You got coming into the base.
Hmm.
Eventually, you might have a higher handle, which is very typical in a cup base, right? Which we get here with a little bit of shakeout. Uh, I try to enter here on this 10-day moving average. This is first touch of the 10-day when we're starting to shape the handle. Similar strategy. Was lucky enough not to get knocked out. And what I started then doing into all those first pops, I would always reduce and eventually close out the position on a backstop. I completely missed this further up climatic move, but good enough.
Yeah, this was a killer trade, and I think what's key here is that you had identified the theme, right? You had the theme that SMR was a part of. What do you kind of typically do to try to stay on top of what themes are setting up? Last year we had quantum computing also as a theme, the nuclear theme, the AI semi theme, of course. What do you do to kind of keep an eye on, what themes could produce moves like this? Is it something that you do by screening or just kind of watching the stocks themselves? That's what tips you off about, what themes potentially are in play.
I think there's no shortcut for work. And if
Yep.
you do your screening, you will eventually discover these patterns, being it either a technical theme, meaning if you look at your watch list and what names are working, are those proper cup with handles, are those pullbacks, are those high tide flags what's working, and of course also groups and sectors. Right? At this point, it was nuclear name, and other point of time might have been AI and so on. Also, you could see last year a lot of this constant rotation underneath the surface. What I would be careful though is a style drift. You still want to keep those watch lists uh, limit to your style of competence. You don't want to be creating, because if you start creating watch lists for value investing and swing trading and scalping, then eventually you're gonna be all over the place and you're gonna miss those themes that you have to look with a kind of microscopic view a little bit more
Right.
underneath the surface.
Yeah, perfect. And one other question I had for this one, and maybe all the names we're looking at today, do you have a sense of which trades had the greatest impact on your year, your performance, which had the greatest equity contribution? Because I would be curious to see if was it a few trades that really propelled your account higher, or was it just kind of pretty consistent over a spread of trades that led to the strong performance?
So if you saw my distribution curve, we can look at my stats, which I have here prepared. Maybe I can.
Yeah, that'd be great.
So this is the statistics. I don't have the distribution curve here,
Hmm.
but if you saw my distribution curve, I had maybe three, four big winners, which were maybe like 40% plus, and there have been maybe in tens, 20s of maybe like 10%, 20%. But most of my gains came also from a lot of overweight positions in a range of maybe 0 to 4% gains.
Hmm.
Uh, yeah, so this, you don't necessarily need a huge winners to have a huge year. It's kind of like in a boxing. If you just keep, stabbing those small jabs, eventually you're gonna have this space for this one huge winning uppercut that will move the needle. But as long as I guess the main thing is to, everybody repeats it, risk control, and risk control.
Yeah, perfect. And looking at this table here, were there any other key takeaways that you think might be helpful for traders watching this?
Mm. So what you can see, I know a little bit that hidden pattern, I guess, because the averages are pretty clear. You can make the head about it. You have the maybe also the important thing is track your numbers, and not everybody's doing it. And I think is the key aspect of the trading. You have to know your game, where you stand. If you look at that average again, average loss, betting average is coming a lot from, as I said, sometimes when I would be stepping on the gas and going very heavy, I would be much more nimble and much less willing to take uh, even any losses. So I would be even, cutting it for very small gains. That's how I react this large betting average. And as you can see, it's kind of this hidden thing that the smaller positions are going to have a smaller batting average. What it kind of hides is you can see that the thing when your portfolio is acting the best is the time to start pressing the gas. And also on the other side, immediately as you see something not acting right, it's time to start pulling the brake and pulling the brake with the full power, as you might be getting into some periods where you might have so much success. So it's like about trading your best
Right.
uh, with the heaviest size and turning your worst with the smallest size possible.
Yeah, perfect. And for that, you're looking at your recent trades to determine whether you're trading at your best or your worst, or is it the setups that you're seeing in the market, or is it kind of a combination?
It's a combination of both. Ideally, like if I see both direction of my portfolio and I see uh, my watch list acting well, it means names are finding the support, they are following through. And so I'll be much more willing to go on the margin and really start pressing the gas very heavy. Whereas, like, for example, now we might have some success, some breakouts now in January 25.
Yeah,
However, overall tape is not very premium and you have to be still, I would say, quite small if you're heavy, very nimble, very fast to knock it out.
perfect.
And
And
also,
yeah, please.
yeah, also one thing, it's like kind of what I picked up from Leif, maybe. Sometimes I would not have really a problem of going uh, quite big intraday, but then it's a matter of also evaluating where you stand towards end of the day. So sometimes I would have no problem ramping it up intraday to 1.5x margin just to close the day, maybe even 30% invested.
Yeah, so staying nimble, that was key.
That
Yeah, perfect. And that's kind of touching on what I wanted to ask you next, which was, you talk about, these stocks, which obviously are pretty volatile, manage your risk, all of that, but also trading aggressive at the same time. So how do you kind of balance trading very aggressive with managing your risk to make sure that, you're not suffering too large drawdowns, all of that, and overall you're making a lot of progress in your account.
It it all maybe first thing it depends how you define aggressive, because you can be having we can also look then later on one other trade if you're entering from aggressive pivots, aggressive entries, like maybe some lower entries where you're running into a lot of overhead, you have a high chance of some implied volatility in the name, or if you mean aggressive that you're entering a name with wider stops, that with the wider stops, I would kind of do the what's very counterintuitive thing, the large the volatility, less space you want to give on the downside.
Hmm.
So I would be maybe willing even to try it a couple times, three, four times, but really keep the risk to a minimum. And the third type of aggressive is going aggressive on your whole equity or your whole portfolio. It's coming back to the thing, evaluating towards the close, how
Yeah.
your names are acting. And if I would see both the traction in my portfolio and the watch list acting great, then I would be more willing to hold this overweight account through multiple days.
Yeah, and I think that's a key question that a lot of people have watching the interviews from traders like yourself from the USIC is, how did they use margin throughout the year to achieve these triple digit returns? And kind of what you're saying is you're using your margin, but you're using it selectively when the market warrants it, when the trades that you're doing warrant it, when end of day you're in a position that warrants the use of margin, where it's proving to yourself that it's worth the risk to take additional size, basically. That's kind of my observation. Was there anything kind of you want to add about how you think about using margin and in your trading?
I think you summarize it perfectly. You just have to be very, very cognizant, very mindful of the total drawdown is there because the margin is a double-edged sword. So once you stop respecting all your rules, if you have them in the first place, then it can really lead to almost a disaster. Uh,
Yeah, perfect. Well, let's get back to SMR. This is super helpful, and I think it's great to see the stats to support that. But getting into SMR here, um, let's see. For you, was there any kind of key takeaways with this particular trade that stands out, or things that concepts that you think would be good for traders to understand? And one thing that stands out maybe is that breakout through 16.91, that one big extension day. Was that after earnings, or was that just a typical
It
breakout?
was it
Yeah,
was just a breakout. It just continued running. What was a very interesting or nice takeaway for me is because often I'll be watching a lot, not just price, but price and volume.
yeah,
And if you forget that the volatility in this name, which was kind of very high, if you look at what's happening both from the price and volume combination, you have a picture perfect behavior here. You would be running, you would have here the breakout, you'll be running from lows where the selling pressure here diminished almost into this right side of the uh, if you look here
yeah,
into this right side here, then we are continuing with the burst into the base,
right,
continuing follow through, increased volume, increased volume, increased volume. When we are coming into a pivots, both being it here, the supply diminishes, same kind of a little bit elevated, but still okay, still decreased volume into the handle area. We have the shakeout there, breakout again. Look at that volume, 40 million shares traded in one day,
right.
and continued also actually even go. Maybe I was a bit premature selling here because if you look at that action here, you have follow through buying again, decreased volume a little bit, follow through buying, same action here, the tennis ball action, decreased selling, increased buying, picture perfect.
Yeah, for sure. And one thing that you said, this is a stock that intraday can have pretty wide ranges. Is there an average ADR percent that you prefer? I know some people who really trade these high momentum names, like 4% plus, 5% plus. Is there a number that comes to mind, or it just
Honestly,
depends?
I don't really look at it. I mean, I started looking at it recently because I followed some few traders that kind of hinted, looking at the ADR, but I've never really looked at the exact numbers. I look at it, I kind of know what it is, but I don't have like a requirement that I would require a certain ADR.
Gotcha. No, perfect. Yeah, any key takeaways from this one, or we can push on to the next trade?
I think we can push on next trade. Maybe last thing, maybe I forgot here. Yeah, if you look at it, actually here we're just starting the stage two uptrend. If you would look at
Right.
the weekly chart, if you look at the weekly chart, we were not that far away. So this is just the also that would be one thing to kind of uh hinting to me to hold maybe a little bit longer. We were just starting this trend, 200-day moved up, the 50-day flattened out. This is the first kind of area where we're start, and here we're rocking the stage two uptrend from here.
Yeah, and one thing that stands out here on the weekly is kind of the overall pattern. It obviously pulled back and had a big neglect period around $2.50 a share. Had a big momentum up move, set back up, had a big momentum move, and then set back up, and then that's where you were placing the trade there. Do you look at that at all? How many momentum moves it's had off the lows? Because you're kind of trading the third wave up. I don't know if you think about that at all.
Well, I would definitely I look at it, and you kind of want to see that trend moving into your direction.
Hmm.
So I would not be trying to bottom fish when we have a 200-day trending down, 50-day moving average trending down. You want to see that the trend turned up. Ideally, 3, 4, 5 months. maybe go as early as maybe 2 months,
Hmm.
but still you want to have the trend in your favor.
Yeah, perfect. And I love how you pointed out here the low volume, those 4 weeks into the lows of the base before you started focusing on the name. I think that's key. Perfect. And one other question I had for you is this name in particular is a pretty low price stock. Is there any consideration to that, or it's all about just the setup and overall liquidity maybe?
It is definitely a factor. I mean, in my general screening, I'll be screening $12 and above. And again, here it was kind of an exception with all other factors, right? So it's not all set in stone, but
Is
with
the theme?
the
Yeah,
theme coming up, the names not necessarily acting okay only on X feed, but also in my actual portfolio.
right.
So this kind of prompted me to also look elsewhere.
Yeah, perfect. All right, let's move on to the next one here.
hmm So maybe what I can show is it was not a very big winner, but to highlight when we talked about being aggressive and being nimble, what can also happen, and sometimes people can understand. So I have here the LUMN trade,
Yeah.
which I traded from this very aggressive entry of a 50-day moving average, and here again, it's a why I would be prompted to trade it much quicker is several factors. The base is not very perfect, even though if you look at that volume compared to the prior uptrend, we can see also a nice profile.
Hmm.
But the overall base, I cannot see really much defined pattern here. It's not any proper handles and so on. If you look at the price, again, we're talking very low price name at the bottom range of my really what I would touch, maybe like below 6, I wouldn't even touch it. But I think here, if I remember correctly, there was some huge news coming into these names, a lot of interest into, I think, some Microsoft also getting interested or getting involved in here. So what I try to do here is to try to trade it of this first, second 50-day touch as it was coming into a base, because what I was expecting here, what could happen against the name could break out, start building some low handle or handle, and continued base and continued upside. Of course, I was very wrong on that, but what happened here, I would take the position about 6% initial risk. Already on that first day, popped about 6%, so I would already de-risk it a little bit. So now when we're talking, if I take 30% off, so now we're talking maybe 4% if I get stopped all the way here. Next day, uh, continued further, solely for almost a 3R, reduced a little bit. And then it started reversing intraday. When you see a reversal like that, depending on your risk tolerance, you might decide if you want what you want to do with it. For me, if it reverses maybe even 12% intraday, it's kind of a big number. So I just close it all the way here. Basically 2 days straight for pretty good gain.
Yeah, was it a news catalyst on that day? I forget why it gapped up, but I
Uh,
remember
I,
this happening.
I don't I don't think so. I think that news started coming here. Then the news came or there was some delayed reaction because I remember there was like some news coming in and the name was not acting at all, and suddenly from nothing it started breaking out. So
Yeah, we'll see. Yeah, this one, yeah, definitely an example of the type of reversal that you can see in these lower price names that you have to be pretty aggressive with that selling when it does happen. But yeah, definitely a good example of a nimble trade.
uh, yeah. And then I can highlight maybe last one so people don't think I trade only these crazy volatile price names. Let me bring in EHA, which was extremely nice. I like Pat Walker says clean and simple base.
Yep.
Uh, it was unfortunately also very quick trade because uh, because we were having earnings coming up and I didn't have really much cushion and so on. But if you look at it, it's a perfect volatility contraction characteristics. You have this gap up here. You start going into this base here. It's kind of a time. If you look at it, it's a little bit time compressed here. Still, I didn't have. It's maybe just a 4 weeks kind of wedged up action. Not really a nice base. Proves with the pivot failure. Continues basing further. What I really like here is the shakeout, and at this area, which is met there with some buying here. So we had some weak hands that we got rid of. And now we're starting setting up the proper pivots in a very nice symmetrical base, left, right. If you would draw the line here you have this nice symmetry in the base, and you start having this natural pivots as this progresses against some lower cheat handle, here a proper handle. So I actually didn't buy it here. I missed it for some reason, or maybe was not even looking at it, but bought it here from this picture perfect handle on the top of this the main supply resistance area, as again the supply completely drenched here, followed by a powerful breakout, increased volume. I would guess it was maybe 40% above average, 50-day moving average. And this allowed me to trade it with an extremely tight stop. That handle was about 2%. As it moved further, again, moved the stop to about 1.3%. So you're talking now on the upside of a very quick risk multiples. I reduced a little bit as we moved through this mini high handle, if you want to call it like that. Unfortunately, got shaken out on the 10-day moving average break for a portion, and then this remaining portion, unfortunately, I would guess it was maybe 4% into earnings, so it was not enough cushion for me, so I just closed it. Unfortunately, gapped up, could have had better profits, but it's all hindsight. So
It's part of the game. Part of the game. Yeah, perfect. Yeah, those cheat areas are really well formed in this one. I think it's a good example of those pivots there. Yeah, I don't think I have too many follow-up questions here. I think it's a good example. And you get to see you're not just trading those sub $10 names. You'll trade wherever the opportunities are. So that's perfect. All right.
Mhm. So should we also jump so we don't talk about only winning trades? We can also look at some of the few losers.
Let's do it. Yep.
So first, I'm gonna bring. I think it's my. If we talk about the technical action and the decisions, I think it was the worst trade of the whole year.
hmm
Uh, Even the percentage wise, it was not very pleasant. What I mentioned highlight here that if you start doing a mistakes, very often those mistakes can lead to some hesitation when eventually it can lead to kind of a paralysis and kind of prevent you from doing some other smart decisions. So that's why I would really advise stick to all your rules. Don't break even single one, because breaking one rule will lead to breaking other rules. And what I did here, first, it was really like over trading. I guess maybe I was starting having a good traction. I was kind of loosening my criteria. If you look at this pivot forming here, the pivot itself is 13%, and you have this large overhead area all the way here. There's quite a lot of selling volume still, even up to this point. Even here we have these 1-2 days
Those
with
wicks. Yeah. On
those
high volume.
wicks. So I try to do what, again, cut down the volatility a little bit by entering, I would say, quite prematurely, already trying to, as it's coming into those big areas of that pullback with the staggered stops, 3 and 9%. which I would say it's a big mistake, at least for me personally, because as I mentioned here, you're loosening stuff. You have an imperfect entry, so you want to again cut down the volatility, cut down the risk, because you have a high chance you're gonna get stopped out. I did the opposite, loosen it even to 9%. What's even worse than we have here, the wedged up entry. We don't have any nice sideways or downdrift action. We're just wedging up, as you can see here. This line here, which is wedging up, which is met by, again, some upper wicks going into that up action. I even added here, even instead of taking some profits, which I would have booked out, I actually added even a little bit more. And then it's just an avalanche of other mistakes. Uh, Next day, surprise, almost kind of a gap down. I didn't react on it. I think I was not even watching the name really closely, so I just got naturally stopped out. So with the slippage, it was maybe at first 3%, then other like about 8% stop. And of course, the traditional thinking is gonna come back. I'll just sell it when it comes to break even. So on that last remaining portion, another awful wedged up action. I continued holding through it, hoping for a miracle. Then boom, next day gap down with the slippage stop for another 12%. So
Yeah, it obviously happens. Yeah, were there any key takeaways from here?
I would
Obviously, you
say,
follow the sell rules, but anything else?
I would say there is multiple points. It's exactly opposite of what we are looking for before.
Right.
Uh, you don't have as we mentioned here, instead of having a pivot that you would have you know, going like downdrift action or sidewave action, you're wedging up here, which is
Hmm.
met by the selling. If you look at the volume profile, you have actually, yeah, here increased volume on those selling areas, met by decreased volume on the buying. So complete opposite of what we were showing before. Yeah, the relative strength lagging. Uh, the volatility also didn't have enough time. It's quite time compressed. Didn't have enough time to work out that volatility, and that, of course, as I said, yeah, not respecting the rules,
Yeah.
hoping, stuck in a thinking.
Yeah, perfect. Well, I think everybody watching this can relate to some placing some bad trades and bad execution, and obviously you ended up having a fantastic year. So there's always a little bit of bad with the good.
And next one we can look at is dollar wise. It was, I think, my worst trade. It was during that December awful drawdown which I had, where I kind of threw all my rules out the window and was trying to revenge trade every single name into a few last days, where I did the exact opposite of what you should do when you start having losses, decreasing the size. I started increasing the size, which led to a disaster. And if you look at this, it was, I think, when I was entering MSTR, I already had a couple of losses. So I was trying to, of course, get it back up into one single trade. Uh, and of course, getting it back up, meaning, entering here. It's, if you look at this here, is first of all, you have here 40% in 4 days. It's awful action. You would really need a lot of weeks for that base to be repaired. And personally, when I enter here, I could have even booked some profits. If you look at it relatively, it might have been maybe like 10%. But of course, stuck in that thinking that I have to make up all the trades, just thinking, okay, I have to leave it to go to 500 because I'm gonna make up all my losses in the last couple of days. Uh, so instead of doing that, uh, kind of got stuck with the name squatted, holding through the squat on this violation, which normally I would immediately sell into. If I see breakout like that not working, what's the reason to hold overnight? You can easily enter next day. You don't necessarily, be stuck with it, or even you can always also reduce the name, maybe just hold it with small portion if you want to, but you don't necessarily have to hold the whole initial position. Uh, which I did. And of course, and the further action continued. Here, unfortunately, I didn't get stopped. So instead of being knocked for the day, I continued holding it to the next open. And I remember it was the first few minutes when it kind of started plummeting down. Kind of sold it for 12%. Being on overweight position, it was 65% positioned. It means total, if you multiply it, is 8% of the whole account in 1, 2, 3 days.
Yeah.
And if you look at again, if you want to take some key takeaways from it, I think it's quite obvious to see what you see here is a sea of red, no buying, just institutions exiting by large. Yeah, you have here 100 million trading volume. That's not the retail traders exiting the position.
Yeah, and that was a huge reversal down that day, obviously. Leos, talk me through, that period where you marked revenge trading and then also the end of the year, because I think there's some good lessons there for everybody. I'm sure it must be a little bit painful to talk about it for sure, but I think that'd be really helpful.
Yeah, absolutely. I mean, I already mentioned it to a couple of people, and it's like if you start chasing instead of focusing on your process, and you start chasing the returns or the money, then the ego can be like your worst enemy once you start battling with yourself. And it doesn't matter if you're shooting, if I was shooting from 960% to 1000%, or if you have $1,000 account and you want to have 100,000 in 1 year. Just stick to your principles and compound the good things. Even if you take a loss, it's still a good thing. So celebrate those things, and it's gonna have this compounding effect in that positive side. The same thing like on negative side. Once you start breaking your rules, you will focus on the once you don't respect your stop, you will start focusing on revenge trading. When you revenge trade, you will start closely watching the position. So it compounds also on the negative side.
Yeah.
And for me personally, it wasn't, luckily, I respected all the stops. Otherwise, I could have blown my account. So it was maybe about 6, 7 revenge trades. But after this MSTR, I have here even one chart prepared of SE. I don't know if you want to show it, but what I did there, I just took a 4% or 3.5% loss of 2x account. So it's another 7% of the portfolio. So it wasn't that many trades.
Yeah, it can happen quickly, and like you've pointed out, you're kind of doing the opposite of what the principles tell you to do. You're sizing larger than typically. You're widening the stops, not respecting the stops, fully. Obviously, you eventually close all of these, but yeah, it's the little things that you want to stay on top of your rules, especially when you're having a really good year and trading well. That's when it can all turn around pretty quickly when you're trying to chase performance versus, playing the hand that's dealt to you. So,
Okay.
no, I think this is important to talk about. So thank you for sharing.
No problem. I mean, it's a key for this triple digit returns. If you stay above water or maybe just a little bit on water, then eventually those better days are gonna come. So if you think 100%, it's a 6% a month compounding over 12 months. So you don't necessarily need to have 100% months to achieve that. So if you stay safe during those bad periods, and just guess it when the going is good, then there you have a triple digit.
Yeah, perfect. Yeah, do you want to bring up that SE chart, or was there another trade you wanted to walk through
Yeah, I
first?
can bring it, and I think we'll be running into all I have. So
Perfect.
yeah, SE, it's quite simple. It's not much to talk about. It's few days. The actual entry wasn't that bad if you look at it.
Hmm.
If you think there is this gap up, which unfortunately closed down, so it filled that gap, but found the support on the 10th day right around the the demand area, the support, continued up from there and started shaping this nice this mini formation, if you want to call it like that, or this natural reaction of about can be about 3 weeks. So that entry is not necessarily that bad. So what I try to do, of course, MSTR at that point is not working for me. I see it's I'm in a drawdown there. So what I'm gonna do, I'm gonna size it up even more because this SE is a previous leader. It has pretty nice setup. So why not to take a chance on this one? So I took it here on this entry as it did his well, it's not necessarily shakeout, but continue this formation here with the complete here again volume dry up and started finding support on this 20-day moving average. So I was thinking pretty good risk reward, about 3.5%. Took a chance there, double my account. Next day, not very nice open, continue down, stop, 7% of the account.
Yeah. It's tough. Yeah. Um, yeah, like you said, the overall setup, the overall execution, outside of position size is pretty typical, and we're taking is yeah,
Maybe if you look at the character of the SE, it was kind of acting that way. Like the first
yeah,
thing what they did also didn't provide you a didn't like proper nice handle. It just continued above, just started setting up on the top of that. Similar, we saw a similar thing here. It started setting up on from that formation here. So it wasn't that unusual for the SE. We're looking at the character, how the name was acting before.
yeah, for sure. Yeah, I think the key things you talked about earlier apply here as well. Yeah, the mistakes you're making because of what else is going on with your drawdown and the mental side of things. Thinking back on that period and moving forward, were there any key takeaways that or rules or things that you're applying so in the future, stuff like this can't happen, or you'll kind of minimize the impact if you start trading like this as well, trying to get back to where you were and all that.
So I would say overall, I want to be even more stringent on the risk side. I think there is still I had during the year, even though those drawdowns were not that big. I think I could have been even more stricter on the risk. And also like started focusing on my emotional and mindset side of the trading because maybe the technical side is I would say pretty decent level, but the trading, similar like working out, bodybuilding, they say 80% is diet, 20% working out.
Right.
I think the same applies to trading. You have 80% the mindset side and 20% the technical or execution side. So, and I think like what I would maybe advise the traders or what kind of I discovered, I guess maybe during the USIC also, it's kind of a trying to kind of self-discover myself and focus on the best version of myself as a trader. Yeah, of course, we all want to, or we all aspire to, be like our heroes, like Mark Minervini and David Ryan and so on. But at the end, it comes down to defining your own style of trading.
Yeah, perfect. I think that's well said. Were there any other charts that you want to share, or was this the last one, Leos?
Yeah. So there are CPNG I traded twice. Again, comes down for, with also trading around the position. First was I wouldn't say a bad entry. It was a first support on the 50-day, even though we have good amount of the overhead here. But again, it comes down to the thing if it opens like CPNG did with the insider here, I can be
Right.
immediately moving my risk. So that breakout was pretty nice, I would say. Unfortunately, what happened, CPNG being Korean name, I think the next day there was some news that came in. I was not even watching the market to take my stop, so came back to my computer and I saw 5.5% stop. So this was one unfortunate, but it can happen too. But what I wanted to highlight here is again that how you can minimize your loss even if you have gap downs with reducing your size. If you look at the second time that I traded the CPNG, again traded from a pullback of this second day, second time 20-day touch as it. If you look at the candlesticks, you would see these very nice, how it's called, inverted hammers. And this area is found its support. Next day it started following through from that support level with about a 3% risk in a trade. Thinking again, it can set up maybe it can pause a little bit here
Right.
around that area, around those highs. So I took a little bit profit as it was also a little bit wedging up. You can see here, yeah, this wick here kind of wedging up into the highs. So I reduced a little bit of my position. Then we were coming into earnings. It was actually a really nice day going into earnings. So I was thinking, okay, maybe there's something Korean name. There might be something that I don't know. I reduced it twice, left a little bit portion, calculated into earnings, gap down, 9% stop. But because we already took a profits before, the total loss was very manageable, 1%.
Yeah, I think this is a good example of how selling into strength can can lock into profits and overall reduce your worst case scenario, like you've said a few times. And yeah, perfect. Leos, this has been excellent. It's so good to walk through the trades, both the good and the bad, and you've been so open with that. So thank you for walking through those. An overarching theme that I want to talk with you that you've already kind of touched on is, the key principles to achieve triple digit returns, like you did last year. And I think what you said about, just 6% compounded each month, ends up being a triple digit year. You don't have to stretch yourself too much, but apart from that and just following a process, are there any other keys that you've adopted personally that you've learned from other people or just from your own experience you've come to realize to really achieve really good super performance?
Mm, I think one principle is also have your game plan ready and stay true to the game plan. Do not try to come up with the ideas, intraday and try to do some nonsense stuff during the days that you're trading. So it somehow should be all premeditated and set in stone. So it will also protect you from this paralysis of not knowing what to do when the markets open. So for me personally, I got caught a couple times during the year that I kind of didn't know what to do. So I just basically closed whole my account and just started entering the next day because I didn't have the game plan in place. So just stick to your rules again, control your emotion, and again risk control multiplied by 3.
Yep, there you go. um Other than that, any other bits of advice that you'd like to leave everybody with, everybody who's watching?
Mm, I would also say, we talked about 6% compounding, but don't be so harsh on yourself. You're not gonna have a premium market like the last year was. So,
Yeah.
if you're achieving, 10, 15, 20% a year, it's still a, magnificent result.
Yep. Perfect. Yeah, 2024, I was building a model book from the last year, and there were so many opportunities, and I didn't even include all the ones that you pretty much included today. So there are a lot of strong movers and strong themes to take advantage of 2024, and that's not always the case. Every year is going to be different in terms of, what opportunities exist. So I think that's important to remember. Leos, this has been great. Where can people connect with you if they'd like to get in touch, or I'll have the link to your Twitter down below. Is that the best place for people to reach
Yeah,
out?
it's the best place to reach out. It's my last name and first letter of my first name. So Mikulkal. Mikulkal.
Yep.
It's my ex.
Perfect. Yeah, I'll put that down below. To everybody watching, I hope you guys enjoyed immensely. I know I had some many important key takeaways. I think the free rolling the trade, managing your risks with risk multiples, that's one of the most important things for me. But I'm sure you guys have your own thoughts, and if you would like to, go ahead and share them down below in the comment section. Check out Leos down below, his Twitter. And thanks so much for your time. Leave a like down below if you enjoyed. Subscribe if you're new to the channel and want to see more of interviews just like this one. And we'll see you guys in future videos. Take care.